Welcome back to UK Economic Report. Today, we're examining one of the most troubling developments in the British economy, the collapse of house builder confidence, and what it means for a housing crisis that is about to get significantly worse. While politicians debate planning reforms and housing targets, Britain's major house builders are hitting the brakes. Share prices have plummeted, construction sites are slowing, and the gap between housing supply and demand is widening into a chasm. This isn't just about property developers and investors. This is about the fundamental question of where the next generation will live. Let's break down what's happening, why it matters, and what comes next. First, let's look at the state of Britain's house builders. The numbers paint a stark picture. The major publicly traded house builders have seen their share prices collapse over the past 2 years. Persimmon, once trading above $30 per share in 2021, has seen its value cut by more than half. Barratt Developments, Taylor Wimpey, Berkeley Group, all have experienced similar declines. The FTSE 350 House Builders Index has significantly underperformed the broader market, reflecting investor pessimism about the sector's prospects. But share prices only tell part of the story. The real crisis lies in construction activity itself. Housing completions in England have been falling. In the 2022-23 financial year, approximately 234,000 new homes were delivered across all tenures. And while this sounds substantial, it falls dramatically short of what's needed. Independent estimates suggest Britain needs between 300,000 and 340,000 new homes annually just to keep pace with household formation and address the existing backlog. We're not just failing to catch up. We're falling further behind every year. Planning permissions granted have also declined sharply. When house builders stop seeking permission for new developments, it signals they don't expect market conditions to improve soon. This creates a pipeline problem. Even if demand surges tomorrow, there's a 2 to 3 year lag between planning approval and completion. We're setting ourselves up for continued shortages well into the late 2020s. The major builders have also been actively reducing their land banks. Traditionally, house builders hold a strategic reserve of land with planning permission, ready for development when conditions are right. But many are now selling off sites, or simply not replenishing their reserves. This isn't normal cyclical behavior. It suggests deep pessimism about medium-term prospects. Construction worker employment in the residential sector has contracted as well. Skilled tradespeople are leaving for other industries or retiring, and fewer young people are entering apprenticeships. This matters because you can't simply restart construction overnight. The human capital takes years to rebuild. So what's driving this crisis in house building? The answer is a perfect storm of economic and regulatory pressures. Interest rates and mortgage affordability. The most immediate cause is the surge in interest rates. After more than a decade of rock-bottom borrowing costs, the Bank of England has raised rates dramatically to combat inflation. The base rate, which sat at 0.1% in late 2021, has risen substantially, fundamentally changing the mortgage market. For buyers, this means dramatically higher monthly payments. Mortgage approvals have fallen accordingly. Fewer approved mortgages mean fewer completed sales, which means house builders cannot move inventory. When completed homes sit unsold, builders cannot recycle that capital into new projects. The entire business model seizes up. Construction cost inflation. Beyond interest rates, construction costs have soared. Timber, steel, concrete, and labor have all become significantly more expensive. Brexit-related supply chain disruptions, the pandemic's aftershocks, and the Ukraine war's impact on energy and materials have combined to create unprecedented cost pressures. House builders operate on relatively thin margins, typically around 15-20% in good times. When construction costs rise 20-30% within 2 years, while house prices stagnate or fall, those margins evaporate. Projects that looked profitable on paper become loss makers in reality. Planning and regulatory burdens. Britain's planning system has long been criticized as one of the most restrictive in the developed world. Getting planning permission can take years and cost millions in consultant fees, environmental assessments, and legal challenges. The rise of local opposition, the NIMBY phenomenon, has become increasingly effective at blocking or delaying developments. Recent regulatory additions have made matters worse. The requirement to remove dangerous cladding from existing buildings has created enormous liabilities for developers. Building safety regulations, while necessary after the Grenfell Tower tragedy, have added complexity and cost. Biodiversity net gain requirements, nutrient neutrality rules, and other environmental regulations, however well-intentioned, add time and expense to every project. Each regulation individually might be justified, but collectively they create a web of red tape that makes smaller sites economically unviable and delays even large developments by years. Market uncertainty. Perhaps, most fundamentally, house builders face profound uncertainty. Will interest rates stay high or come down? Will the government hit its housing targets or abandon them? Will planning reform happen or stall? Will house prices recover or fall further? In this environment of radical uncertainty, the rational business decision is to wait. Pause acquisitions, slow construction, preserve cash, and see how things develop. Unfortunately, when every major builder makes this rational individual decision simultaneously, the collective outcome is a housing supply crisis. While supply contracts, demand continues to grow relentlessly. Britain faces a fundamental imbalance that makes the current situation particularly dangerous: demographics and household formation. The UK population continues to grow through both natural increase and immigration. More importantly, household sizes are shrinking. More people are living alone, forming single-person households. Divorce rates, later marriages, and longer lifespans all contribute to increasing numbers of individual households. The Office for National Statistics projects that England alone will need millions of additional homes by 2040 just to house the expected population under current household formation trends. This isn't speculation. It's demographic momentum already baked into the system, the rental crisis. With homeownership increasingly unattainable, more people have turned to renting. But the rental market is in crisis too. Private landlords are exiting the market in large numbers, deterred by tax changes, increased regulation, and poor returns. The number of available rental properties has fallen while demand has surged. The result is that rents have increased dramatically in most British cities. In London, Manchester, Birmingham, and Edinburgh, renters face bidding wars and are often forced to offer above asking price just to secure a property. When rental costs consume 40%, 50%, or even 60% of take-home pay, people cannot save for deposits. The pathway to homeownership becomes a closed loop. Regional imbalances. The housing crisis isn't uniform across Britain. In some northern towns and post-industrial cities, property prices remain relatively affordable and vacancy rates are higher. But in economically dynamic regions, London and the southeast, Cambridge, Oxford, Bristol, parts of the Midlands, demand vastly outstrip supply. This geographic mismatch matters because jobs and economic opportunity are concentrated in precisely those high-demand areas. Young professionals cannot afford to live near their workplaces. Key workers, teachers, nurses, police officers are priced out of the communities they serve. This creates economic inefficiency, longer commutes, and social problems. The housing crisis isn't just a problem for those trying to buy or rent a home. It has profound knock-on effects throughout the economy. Productivity and labor mobility. When workers cannot afford to live near job opportunities, economic productivity suffers. People face longer commutes, reducing time available for work and increasing stress. Companies struggle to recruit and retain staff in expensive areas. Talented workers may turn down promotions or job offers because they cannot afford to relocate. Economic research consistently shows that housing costs in successful cities act as a brake on economic growth. Britain is essentially preventing its most productive regions from realizing their full potential because not enough people can afford to live there. Wealth inequality. The housing crisis has become the primary driver of wealth inequality in modern Britain. Those who bought property 20 or 30 years ago have seen their wealth multiply through no particular effort of their own. Those born later face a locked market where homeownership seems an impossible dream. This generational wealth divide creates social tension and political instability. It's no coincidence that voting patterns increasingly correlate with housing tenure. Homeowners and renters have fundamentally different economic interests, and politicians struggle to satisfy both constituencies simultaneously. Consumer spending. When households spend enormous proportions of their income on housing, they have less for everything else. High rents and mortgages reduce consumer spending on goods and services, dampening economic growth. Young people cannot save, invest, or start businesses when housing costs consume their earnings. The Bank of England faces a particularly difficult challenge here. High interest rates are supposed to cool the economy by reducing spending. But when people must continue paying for housing regardless, the burden falls disproportionately on discretionary spending, potentially causing a deeper recession than intended. So where do we go from here? The outlook is concerning, and there are no easy solutions. The short-term outlook. In the immediate term, house building will likely remain depressed. Until interest rates stabilize or decline meaningfully, mortgage affordability will keep demand subdued. House builders won't restart construction in earnest until they see clear evidence that completed homes will sell at profitable prices. This means the supply-demand gap will continue widening. Every year, we underbuild by 50,000 or 100,000 homes adds to the cumulative deficit. By 2030, Britain could be short several 100,000 additional homes beyond today's already severe shortage. House prices may continue stagnating or falling in nominal terms, but don't mistake this for affordability. Prices could fall 10% while simultaneously becoming less affordable if mortgage rates remain high and incomes grow slowly. Affordability is about monthly payments, not headline prices. Policy challenges. The government faces extraordinarily difficult trade-offs. Loosening planning rules could increase supply, but faces fierce local opposition. Offering subsidies or tax incentives to builders costs money the Treasury doesn't have. Forcing local authorities to meet housing targets is politically toxic in many constituencies. The recent focus on brownfield development, while environmentally preferable, won't solve the scale of the problem. There simply isn't enough suitable brownfield land in the right locations. Controversial as it is, meeting housing need will require building on some greenfield sites, particularly around transport links. Some have proposed radical solutions, allowing taller buildings, relaxing green belt boundaries, streamlining planning approvals, or even having the state directly build homes on a massive scale as in the post-war era. Each approach has merits and drawbacks, and all face substantial political obstacles. The role of interest rates. Much depends on the path of interest rates. If inflation moderates and the Bank of England can cut rates significantly, mortgage affordability could improve, potentially reigniting demand. House builders and buyers must adapt to a world of structurally higher borrowing costs. This means smaller margins for builders, smaller mortgages for buyers, and ultimately a recalibration of what affordable housing means in Britain. Britain's housing crisis stands at a critical juncture. House builders are in freefall, not because of temporary problems, but because of deep structural issues in how we build, regulate, and finance housing. The crisis manifests in collapsing share prices and stalled construction sites. But the real tragedy is measured in lives constrained and opportunities denied. Young people postponing families because they cannot find stable housing. Key workers leaving professions because they cannot afford to live where they work. Economic potential squandered because talent cannot access opportunity. This crisis has been decades in the making. Britain has systematically underbuilt housing since the 1980s. We've treated homes as financial assets rather than essential infrastructure. We've allowed planning processes to become exercises in delay and obstruction. We've financialized housing to the point where the system serves investors and existing owners rather than those who simply need somewhere to live. There's no single villain in this story. House builders respond rationally to market signals. Local communities understandably resist disruptive development. Regulators try to balance legitimate safety and environmental concerns. Politicians face contradictory pressures from different constituencies. Everyone acts reasonably from their own perspective. Yet collectively, we produce an outcome that serves no one well. Breaking this deadlock requires political courage, policy innovation, and probably some willingness to upset entrenched interests. It means accepting that solving this crisis will require building more homes in places where people don't want them built. It means choosing between environmental preservation and housing need. It means recognizing that the status quo is not sustainable. The house builders' crisis is really Britain's crisis, until we confront the fundamental question of how to house a growing population in a country that struggles to build. We'll continue down this path. The construction sites will remain quiet, the prices will remain unaffordable, and the gap between housing haves and have-nots will continue widening. The housing crisis isn't beginning, it's been here for years. But it is about to get significantly worse unless something fundamental changes. The question is whether Britain has the political will to make those changes before the consequences become even more severe. Thank you for watching UK Economic Report. If you found this analysis valuable, please like, subscribe, and share. Leave your thoughts in the comments below. What do you think is the solution to Britain's housing crisis? And as always, stay informed, stay analytical, and I'll see you in the next report.